All right, good morning. Let's go over today's trade plan. So in the overnight session, mentioned in the recap that we wanted to hold above 61 to 62, and buyers did hold ES above 61 to 62 overnight, and then eventually we got a break above the 68 resistance, which is yesterday's high. So at this point, the price action in the S&P is confirming buyers in control, and our short-term bias is bullish in the S&P. The only red flag right now is the relative weakness in the other markets. Now, the other markets can play catch-up, and they can make an upside break, within their own markets and head higher. But what we don't want to see is a breakdown in NQ or TF. So, ideally, we want to see NQ trading above the 3600 to 3605 area to confirm that there's some strength coming into the Nasdaq as well. On TF, ideally we want to see it trading above 68 to 70, and that doesn't mean that those markets are very bullish when they do that, but at least they're not short-term bearish, right? At least it takes that selling pressure off of those markets, and that allows for some upside movement in the S&P, and perhaps those other markets can then catch up to the S&P and start heading higher as well. So that's really the only red flag that we're seeing right now, and the only reason to be cautious. The overnight volume is relatively low in ES, but we're seeing some decent volume in NQ, and TF is trying to improve as well. That's not really that big of a deal because the overnight session we usually don't see massive volume unless it's a really big area being taken out. So right now, heading into the open, we're using that overnight breakout area, 66 to 68, as pre-market support, and buyers can maintain firm control above that area and target the 73 to 75 resistance, followed by 76 to 75, and the final upside target would be 79 to 81, with the all-time high at 80.5. So of course, all that depends on how strong this breakout is, but we have been stuck below 66 to 68 for for a couple of weeks now, and that area has been a very key resistance area for quite some time. So now, if we hold above that zone, it would tell us that we're seeing some pretty decent strength in the market, and for that reason, we don't want to look for any short setups above 68. The only time we would short the market above 68 is if the other markets started breaking lower significantly, and it was pretty clear that this is more likely to be a failed breakout attempt rather than a valid breakout. Now, below pre-market support, we have the HVN at 64.5, the prior VPOC 65, and even if the market pulls back to those areas, it can still be okay for the buyers. We're using 59.5 to 61.5 as the bull bear zone, and that's a pretty key support area right now in the S&P. And even though buyers can technically maintain control above it, we don't really want to see ES pulling back that far. If this is a strong market, then we should hold above 66, 68. But at the minimum, 64.5 to 65 areas should hold. So anything lower than that would be a caution sign for buyers, but 59.5, 61.5 is the last line in sand for the buyers, and if we break below that zone, then it could result in short-term liquidation, and that would bring the 55 to 56.5 into play, and the 48.75 to 50.75, and at that point sellers would be in control, so we want to be careful taking any long setups. So below 59.5, we could just get some pause at the 55 to 56.5 and then break lower to the 48.75 to 50.75, and then even that area doesn't necessarily have to result in a big bounce or anything. It could just be rotational price action. So below 59.5 we want to be cautious on longs. Above 68 we want to be cautious on shorts, and at the moment the focus is more on the long side. Buyers are clearly in control right now, so there's no point in looking for any fade setups. Right now you're either looking for a long setup or already long from pre-market and looking for a upside breakout. So ideally we hold these support levels here, 64.5, 65, pre-market support, and then continue to head higher. We can still get rotation at the resistance zones, especially 76, 75. That's a recent high in the market, so that can get some profit taking. But really, if this is going to be a strong breakout, and we're breaking above a significant area right now, those 68s are pretty decent resistance that we broke out from. So we should actually head up to initial resistance 79 to 81 before we get any better sell response. And even then, I'm not looking to short the market. That's all-time high, and if you take that out, then there's no resistance, right? So even though we can get profit taking because it's the all-time high, we still want to be careful shorting that level up there, because if we balance for quite a bit above it and then head up, then we can poke above 81 and then find some sellers. So you want to be careful there. But right now the focus is more on the long side. Buyers are in control. The main catalyst is the ISM manufacturing index at 9 a.m. Central. But this upside move can continue even prior to econ. From a market structure perspective, this is a breakout above decent resistance. So we don't necessarily have to wait. Of course, that econ report is important, and there could be still some balancing ahead of it, but it doesn't have to pull back significantly ahead of econ if this is really going to be a strong break. So those are really the main ideas right now. Focus is on the long side, definitely above pre-market support and even above 64.5. And then if we start seeing some failure in the other markets and pullbacks in the S&P, and some significant failures in the other markets, like a break below 35.90 in NQ, a break below like the 68 area in TF, then we can consider short setups. But right now, it's either you find a good spot to get long, or you just stay flat. So those are our main ideas. Let's see how well the S&P and the other markets hold up, and we'll take it from there.